I'm going to make a video to show an example about how to calculate the free cash flows. So if you remember, this is the chart, the flow chart we had on the lecture slide about the 5 easy steps to calculate the free cash flows. So in the following example, I'm going to show you how to use the steps described here to calculate the free cash flows. The example I'm using is question number 12 from the end of chapter questions in that textbook. If you have a different edition, the question number may be different, but you should be able to find a same question. So let's see. The first step, if you remember, is to calculate the notepad. According to the notepad formula, we want to calculate the notepad as EBIT multiplied by 1 minus t. So you should be able to find the EBIT number from the income statement. Tax rate is 40% as given, so EBIT multiplied by 1 minus 40%, we should have the notepad readout as 756. So that is the step 1 you can see from that flowchart. Now, step 2, if we go back to the flowchart, step 2 is here to calculate the net operating working capital. We actually need to calculate the net operating working capital for 2 years, this year and last year. So operating working capital is the operating current asset minus operating current liabilities. And we will find these numbers from the balance sheet. Last year, we have the operating current asset as cash, accounts receivable, and inventories. So the total is this much. And also from the balance sheet, we can find the account payable and accruals. So the operating current liabilities is 1,500. Notice here we do not include note payable as part of the operating current liabilities. And so the difference between the operating current assets and the operating current liabilities for 2012 is 3,000. And we can use the same idea, but just use different the numbers from different years. For 2013, total operating current asset is 4,950, and that's from here. And total operating current liabilities is 1,650, is from here. And the difference is 3,300. For each individual year, for example, 2012, we calculated the net operating working capital in the last step. And then we just add the operating long-term asset. This number can also be found from the balance sheet. And short-term and long-term together, we have the total net operating capital. And we can also calculate this number for 2013. So let's see. For 2012, actually this should be 2012, we just calculated from the last step the net operating working capital is 3,000. And from the balance sheet, we find the net fixed asset, and it turns out to be 3,500. So if we add up these two numbers, short-term and long-term, the total net operating capital for 2012 is 6,500. And we can apply the same idea with 2013's number. And again, net operating working capital was calculated in the last step as 3,300. And we go back to the balance sheet and we find the net fixed asset, or say the net plant and equipment, as 3,850. Or together, short-term plus long-term, we get 7,150. Now, going back to this flowchart, we see that for step 4, we are trying to calculate the total net operating capital this year, which is 2013, minus the net operating capital last year, which is the number actually we just calculated back in step 3 for 2012. So we actually already got this number, both these numbers from step 3, and now we just find out the difference between the 2 years operating 2 years total net operating capital, and the difference we call it the net investment in operating capital. Remember from the last step, we calculated the total net operating working capital for 2012. It was 6,500, and for 2013, it should be 7,150. So the difference between these two numbers is the so-called net investment in the net operating capital. So 7,150 minus 6,500, that's the net investment. The last step to calculate the free cash flow is to use the net operating profit after tax, which is the result we got from step 1, and minus the net investment in operating capital. And this is the result we got from step 4. So the difference is, or say the leftover, is the amount of free cash flow. So now when we try to put the numbers together, NOPAT as we calculated from step 1 should be 756. And the net investment in total net operating capital, remember the difference between the 2 years numbers, that would be 650. So the difference, or say the leftover, is a free cash flow of 106. Hopefully in this video, I explained how to calculate free cash flow based on the balance sheet and income statement numbers. So if you need, you can go back to the flowchart and look at the steps, total 5 steps described there, and that should give you a pretty good idea about how to work on every step, and also well to get the information that you need in these calculations. In this question, we can also try to understand how the company used the free cash flows. If we look at the 2013 number, we can see the company actually paid some interest expense. If you look at the interest expense from the income statement, use that number multiplied by 1 minus t, well t is the 40% tax rate, then you can see the after-tax interest payment is 72. The company can also use the money to pay off the debt. In this case, you see that between 2 years, the debt balance actually went up. So the company actually increased the debt. That means they borrowed more money. So that is why we are actually having a negative 284 here. So that means the company did not use their free cash flow to pay off the debt. Instead, the debt balance increased, so they actually have more cash coming in as a source of their cash flows. The company used some money to pay off the dividend, so that's a payment of dividend, 210. You should be able to see that same amount, this number, from the cash flow statement. The company also used some of the money or some of the free cash flows to repurchase some common stocks. Now, if you look at the balance sheet of 2 years, you look at the common stock book value between 2 years. The difference should be consistent with the 88 here. When you see that difference, or say increase of the common stock book value, that is telling you the company actually decrease of the book value. That means the company spent some money to buy back the stocks. So that is a use of the free cash flows. Also, if you look at the short-term investment, again from the balance sheet under the current asset. So you see the balance of the short-term investment increased by 10. That means the company actually used about 10 million to buy, to purchase short-term investment. So if you add up all these numbers, it turns out to be 106. That is just an illustration about how the free cash flow 106 that we calculated in the previous couple of steps, how that 106 is used inside of the company. Again, to pay off the interest, to pay off the principal, to pay dividend, to repurchase common stocks, and also you can use the money to purchase some other non-operating asset, or say the short-term investment. So this is an example. Again, this is an example to calculate the free cash flows and try to understand, first of all, why we calculate the free cash flows. Why we calculate the free cash flow is because we try to understand how the company generate free cash flows and how much the company generates free cash flows. And then we try to understand what can be done with the free cash flows that the company generates. Free cash flow calculation is a pretty important and sometimes challenging subject in this chapter 2. So I would encourage you to practice with this example, and also you can try to practice with that spreadsheet problem that I posted on D2L. If you have any questions regarding to the free cash flow calculation, or other questions regarding to chapter 2 and chapter 3 material, feel free to ask me, email me, or ask your questions on the discussion board.